Howdy, everybody. Welcome to Liberty Call for Wednesday, April 30th, 2025. Hope you're having a fantastical day out there in the interwebs. Pretty nice day here in Colorado. And if you notice, come here. We got a new Deputy Director of Security here. He wants to come over. Nolan, come here. Here he is. Here's our new little man. This is Nolan Dahlman. He's going to be, he's in training right now to be our Assistant Director of Security. So Jake is teaching him very well. So we brought him home last night. He's quite squeaky. So, all right. Well, that was your treat for the day. The economy just hit reverse. GDP shrank 0.3% in Q1, spooked by a tariff-fueled import surge, and markets took it on the chin. The Dow dropped nearly 700 points when it opened. Tech and cruise stocks cratered, and Wall Street's now betting on Fed cut rates by a full point this year. Recession chatter is back and louder than ever. So before we break all the news down, if you could do me a favor, give some thumbs up, a like, share, subscribe, a follow, and press that notification bell. And our little friends under here probably chewing on my shoes. All righty. Well, let's get to the markets and see how they did today. All right. Well, the Dow definitely improved. It finished in the green, up 0.35%, 141 points, closed at 4669. S&P 500 up 0.15%, 8 points, closed at 5569. NASDAQ down 0.09%, down 14 points, closed at 17,446. The VIX was up 2.61% today. It's at 2480. Canada down 0.13, Brazil down 0.01, and Mexico up 1.16. All right, so headed to Europe. Germany was up 0.16%, the UK up 0.37%, France up 0.5%, the Netherlands up 0.36%, Spain down 0.59%, Italy down 0.71%, Switzerland up 0.22%, and Portugal up 0.36%. All right. Russian exchanges, both red today. The MOEX down 1.22, the RTSI down 1.13. And the overnight markets, the Nikkei in Japan was up 0.57%, Australia 0.69, New Zealand down 0.64. In China, the Shanghai down 0.23, Shenzhen Component up 0.51, China A50 down 0.61, DJ Shanghai down 0.01, Hang Seng up 0.51, and the Taiwan weighted up 0.99%. All righty. So that's that. Good stuff. I mean, the markets were down today, but they decided to rebound quite nice. All righty. Well, let's get to the market recap. S&P 500 falls as weaker growth data stoke recession fears. Looks like you wrote this article before the market zoomed into the green at the very end. The S&P 500 fell Wednesday as a wave of weak economic data and corporate earnings reignited concerns about a U.S. recession. The drop capped a volatile April that began with a sharp sell-off following President Trump's tariff announcements, briefly pushing the S&P 500 into bear market territory. The new data revealed the U.S. economy contracted by 0.3% in Q1, a sharp reversal from the 2.4% growth in Q4 of last year, well below expectations of a slight expansion. At 41.3% surge, a 41.3% surge in imports, businesses pulling forward purchases ahead of tariffs dragged on GDP. Additionally, April's ADP report showed private payrolls grew just by 62,000, down from March's revised 147,000. Other signs of weakness include a drop in consumer confidence to May 2020 lows and a decline in job openings. Despite the grim data, there were glimmers of hope. Trump signed 2 orders easing auto tariff impacts, including tax credits, material tariff relief, just before visiting Michigan. Reports also suggest the U.S. is quietly reaching out to China to resume tariff negotiations, lifting sentiment modestly. Corporate earnings, however, were mixed. Microsoft and Meta were in focus after the bell. Snap tumbled 14% despite better than expected revenue, citing macro uncertainty. Supermicro Computer plunged 15% after cutting guidance on AI-related spending. Starbucks dropped 7% as global sales continued to decline, and Caterpillar reported weak profits due to economic softness, while Norwegian Cruise Line fell over 8% after slashing full-year guidance. Overall, market sentiment remains fragile, with investors hoping trade de-escalation and upcoming earnings from Apple and Amazon might stabilize direction in the days ahead. Maybe, probably not, but maybe. You can always be hopeful out there. All righty. Well, let's jump into our first article here with some data. First quarter GDP, the initial report from First Trust. Mr. Robert Stein put this together. Real GDP contracted at a 0.3% annualized rate in Q1 of 2025, driven almost entirely by a historic drag from international trade. Businesses rushed to import goods ahead of new tariffs, causing net exports to subtract 4.8 percentage points from growth, the largest trade-related GDP hit since at least 1947. Despite the headline contraction, analysts argue this doesn't signal a recession. Core real GDP, which includes consumer spending, business fixed investment, and home building, but excludes government inventories and trade, grew at a 3% annual rate, matching its year-over-year pace. Notably, business investment in equipment surged at a 22.5% annual rate. These indicators point to ongoing economic resilience. Economists expect a Q2 rebound as trade normalizes. However, inflation remains a concern. GDP prices rose 3.7% annualized and 2.6% year over year, outpacing the 2.4% rate seen earlier in the year. Nominal GDP rose 3.5% in Q1 and is up 4.7% over the past year, slower than the prior 5.4% pace, suggesting cooling inflationary pressures. Given slowing nominal growth and weak M2 money supply expansion, the Federal Reserve might have room for a modest rate cut by mid-year. Fiscal policy is also tightened, with tariffs boosting revenue and DOGE-driven spending cuts taking effect. Elsewhere, April's ADP report showed 62,000 private payroll gain. Analysts forecast Friday's official jobs report will show 145,000 new non-farm payroll jobs. A slowdown from the 6-month average of 181,000. All right, so good stuff. As my little friend here chews on my thumb. Got to keep him busy so he doesn't make noise. All right, got another research report here, or data report. March personal income and consumption, also from First Trust. Mr. Andrew Opdyke put this together. All right. Consumers remained active in early 2025, with personal income rising 0.5% in March, while January and February gains were largely driven by government transfers, such as Social Security COLAs and Obamacare premium subsidies. March saw healthier growth from private sector wages and salaries, up 0.5% for the month and 2.9% year over year. By contrast, public sector pay rose 5.4% and government benefits surged 6.9%, raising concerns about unsustainable deficit-driven growth. Consumer spending jumped 0.7% in March, with a strong growth in both goods, positive 0.9%, and services, a positive 0.6%. Much of the boost came from pre-tariff purchases of motor vehicles and parts. Year over year, goods spending rose 4.1%, while services surged 6.3%. Inflation remained tame, with the PCE price index was unchanged in March and is up 2.3% from a year ago. Core PCE, excluding food and energy, was also flat, rising 2.6% year over year. However, the supercore measure, which strips out goods, rent, and energy services, rose 3.3%, highlighting persistent underlying inflation. The Fed is unlikely to change rates in May, but is watching fiscal policy closely. Rate cuts may come later in 2025. And let's see, the next Fed meeting is on May 6th and 7th, and then June 17th and 18th. So I would probably guess it'd either be June or July would probably be your best bet, as far as, because if bad things are going to continue, they'll probably be much worse by then. In housing, pending home sales jumped 6.1% in March, signaling stronger existing home sales in April. Home prices continue modest gains, with both the Case-Shiller and FHFA indexes up 3.9% year over year. All right, good stuff. Got one more article here, and then we're done for the day, folks. Pretty exciting. All right, this comes from Zero Hedge, the gold rush you weren't supposed to notice, and the next big monetary reset. All right, this was written by Nick Giambruno via internationalman.com. All righty. In 2024, central banks bought roughly 34 million ounces of gold, continuing a trend of record level accumulation that began after the 2008 financial crisis. The surge reflects a global pivot back towards gold, with 2025 expected to see continued heavy buying. Russia and China, geopolitical rivals of the U.S., have led this trend, amassing massive gold reserves, often beyond their official figures, as both nations are top producers and consumers of gold. Central banks and governments now officially hold over 1.2 billion troy ounces, though the true figure may be far higher due to the strategic secrecy surrounding gold holdings. In contrast, the U.S. has not officially added to its 261 million ounces in decades, at least publicly, and if it's actually still there. Since Donald Trump's 2024 election win, however, over 19 million ounces of physical gold have flowed into the U.S. from hubs like London and Switzerland, an unprecedented move in a market usually dominated by paper trading. This volume equals about 13% of Fort Knox's alleged holdings and hints at government involvement. Trump has notably revived public interest in Fort Knox, even raising the idea of an audit. Well, seriously, let people in there, and I just wanted to see if the gold's there. I'm not so concerned about counting down to the last ounce, but is the gold there? I mean, that would be a good thing to know. This, combined with gold inflow, suggests a coordinated government effort, possibly tied to upcoming monetary reforms or financial instability. The broader message: follow the gold. Central banks are hoarding it, and the U.S. is quietly accumulating it, and Trump is drawing attention to it, indicating that major economic shifts may be on the horizon. All right. Well, that is everything that I had to cover for today. So if you need to get in touch with me, where do you go? Wait for it. DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be glad to help. All right. Well, that's everything that I had to cover for today. Me and my new friend Nolan here are going to go hang out, and we're smoking some ribs on the back patio. So I smell like a barbecue place right now. You can't tell through the video unless you have smell-o-vision, which I don't think I have that feature on YouTube yet. All right. Well, hope everyone has a great night, and I'll talk to everyone again next time. Adios.